What is happening with mortgages? There's been a lot of talk lately, and first it was about you don't have to have a credit score in order to get qualified for a loan. Then we hear the 50-year mortgage thing caused a lot of stir, and now it's portable mortgages. You know, today I heard about the non-qualified loan. So there's a loan out there that it's called non-qualified, which means you don't have to show your tax returns. They work off of your bank statement. So if you're one of those people that owns a business that doesn't want to show income because you don't want to pay taxes, they can just look at your bank statements and say, yep, you're good. If you're one of those business owners, let me know, I can connect you with the person. But here's the deal. They are trying desperately to get programs out there so people can afford and people can buy homes because they know how important the real estate industry is. You know, I think to myself, back when we had the ARMs, that were like the 2 to 3 to 5 year ARMs where you had a rate of 6% locked in, but then you could get 3% for 2 years, you know, they did really, really well. And let's face it, most people don't hold a mortgage for over 7 years. So a 5 to 7 year ARM could be a great option. But for that to work, you have to have a better ARM rate. And for the last, decade or 2 decades, ARM rates haven't been good enough, so people just go with a 30-year fixed. Will this portable mortgage be the solution? I think we've pushed the 50-year mortgage out of the way, but that was an idea to get people talking. Will this portable mortgage work? Basically, what you can do is take your loan that you currently have on your house to the next one. But one thing you can't do with that portable mortgage is, let's say you have $200,000 equity and you wanted to pay $100,000 of your debt off and use the other $100,000 for down payment, you probably won't be able to do that. And if the next house is $200,000 more, then you might have to get a small loan for that $200,000 or come with more money to the table. But I really like the idea. It's just, how are they going to make it work? Will they apply it to old mortgages? Can they even do that? Because it's not in the original mortgage that was written. So if it only works for new mortgages, well, that's going to be a delay for that to actually do us any good. But it might get people to pull the trigger. But why would you want to pull the trigger when rates are high? Because later on, you're not going to want to use that mortgage for the next place because rates are high right now. I don't know. All I'm saying is they're trying desperately to get this housing market back on track because the truth of the matter is it's been down for a long time and something has to change.